Guys, as Bitcoin enters a new period in the market cycle, heading into the halving in 2024 and heading into a cyclical bull market shortly after that, we do have to ground ourselves in reality and actually speculate on some of the bearish arguments as well. Is there any chance this could be ruined? Now, obviously, one of the biggest bearish arguments in the cryptocurrency market was the whole idea that traditional markets could drag Bitcoin downwards to new lows. This was an idea that was circulated heavily throughout 2022, circulated very heavily throughout the entirety of even the start of this year as well. And this was circulated by massive accounts, big names in the cryptocurrency space. Let's look into this idea again, because it does actually hold some weight, but there is a specific reason why I don't pay too much attention to it, even though it is valid on a technical level. So, will it occur? Will Bitcoin be ruined by traditional markets? Let's take a look today. I think it's very important to make this video today because we've seen a break of all-time highs in the S&P 500, which is quite interesting because throughout the entirety of the last 14 months, which is when the S&P 500 bottomed out 14 months ago, we've seen these bearish claims continue to be circulated throughout crypto YouTube, throughout crypto Twitter about how this chart is going to somehow drag Bitcoin downwards, which is kind of funny to me because it's only done the opposite, really. If anything, it's pulled Bitcoin upwards because this thing has reached an all-time high. So it's quite interesting to see these claims continue to circulate. But I will say, even in saying this and even in kind of ridiculing the idea of it at the start of the video, it does hold some weight to an extent, okay? There is an argument to be made that the S&P 500 will go downwards again and will drag Bitcoin downwards. We're going to assess that argument today. We're going to assess as well why I don't think it's particularly important. But I am assessing it and looking at the validity of it in the same breath. So it is quite a nuanced point of view. But let's look into it first and foremost. Right, so, okay. What happens in the S&P 500? Okay, and this is the blue chart right here is the S&P 500. The orange chart right here is interest rates. What you will notice is that the S&P 500 doesn't usually start correcting until interest rates start dropping. Okay, that's generally what occurs, or it doesn't usually stop correcting, I should say, until interest rates start dropping. So we had, for example, this correction here, for example, starting dot-com bubble, we'll go to that first and foremost. There's another one over here in 1980s where we had the interest rates start declining. That's when the S&P bottomed. We had dot-com bubble. We had S&P topping. Interest rates declined when they bottomed out. That's when the S&P bottomed. Same thing over here in 2008 for global financial crisis. Okay, S&P 500 bottomed when interest rates were decreasing / when they bottomed out. Same thing over here in 2019, even though it wasn't really much of a recession. It was the COVID drop, and you can see that the S&P really bottomed out when interest rates reached zero, essentially. So what you'll notice is that there is a trend here, and it's a very well established trend, that generally speaking, the S&P 500 and traditional markets in general bottom out or get close to their bottom when the interest rates start decreasing or get close to finishing decreasing, really, not necessarily when they're rising. So this is interesting, right? It's an interesting thing to look at because we haven't seen interest rates go down yet, okay? And we know that historically speaking, when they do go down, that is when the S&P sees the brunt of its correction, right? And that is when the S&P truly bottoms out. So using that argument, and I'm gonna ridicule that argument in a second, right? I'm gonna criticize it in a second, but I'm just putting that forward to you for the moment, for the time being, right? Using that argument, this whole all-time high breakout, this whole move we've seen in the last 14 months could just be a big scam, and the bigger move downwards could be yet to come, right? And using that argument, which is what a lot of people are using, S&P 500 could be bound to go quite a lot lower, right? Now, first and foremost, before we even ridicule that argument, the only way this would affect Bitcoin, okay, is if the S&P 500 and Bitcoin are in fact correlated. Now, I would argue that the correlation between Bitcoin and the S&P 500 are not as concrete as a lot of people think they are, all right? Now, of course, during the last 2 or 3 years, it has been concrete. If you look from 2020, from when quantitative easing started, from when the money printing started occurring, Bitcoin went upwards with the S&P. Bitcoin went downwards with the S&P. Now, this is explainable by the fact that money printing pumps everything upwards. So, of course, there's going to be a correlation. If there's a massive amount of US dollars being brought into circulation, brand new, fresh off the bloody printer, okay, of course things are going to go up. Of course things are going to seem to be correlated, right? In the same way that the S&P 500 and bloody lollipop prices in a New York vendor would have been correlated during 2020 to 2022 because of inflation. Of course, things are going to look correlated at that point in time. The problem is the correlation did not really exist before that point, right? Yeah, I mean, you can look at 2019 and say, oh, look, they bottomed out at the same time. But actually, that's not really a valid argument, because during the entirety of 2018 to 2019, you saw the Bitcoin market drop downwards massively, 69%, 70% during that period of time, where the S&P 500 was actually breaching new all-time highs. So the argument that the S&P 500 and Bitcoin have always been correlated is an asinine argument. Even if you're looking at 2014, S&P 500 going upwards when Bitcoin was going downwards, for example, over here, Bitcoin seeing a rounding bottom while the S&P was seeing a rounding top. Okay, so Bitcoin and the S&P 500 only really started correlating to each other when quantitative easing started occurring, and that's very easily explainable by the fact that quantitative easing pumps everything, not by the fact that these assets are inherently linked to some major degree. Now, given the fact that I've just made the claim that quantitative easing, money printing, was the start of correlation between Bitcoin and traditional markets, you might point out that in the last 2 years, we haven't seen money printing, we've seen quantitative tightening. In that case, you might say, well, Wolf, what about the last 2 years, right? And I would say that, first and foremost, Bitcoin was always cyclically meant to go down in November 2021. There's a very strong 4-year cycle theory on Bitcoin. It very, very clearly suggested that Bitcoin would be dropping in November 2021, in the same way that it very clearly suggested Bitcoin will be topping in November 2022, in the same way that it very clearly suggests Bitcoin will be topping in October 2025, right? This is a cyclical trend on Bitcoin. It's not a theory. It's objectively true. The 4-year cycle is a real thing. So Bitcoin was always going to go down in November. Now, traditional markets, they dropped down as well at the same period of time. And that probably occurred because of the macro changes, right? Inflation reaching massive highs, or we're speculating to reach massive highs at that point in time, right? Interest rates starting to rise for the first time in a while, money printing coming to a halt. There's no real indication at all that this Bitcoin and the S&P 500 going down around the same time was an indication of one of them dragging down the other, or anything like that. In fact, Bitcoin started going downwards 2 months before the S&P 500 even moved downwards. So the argument that the S&P 500 dragged Bitcoin downwards is faulty in that regard, because Bitcoin moved first. In the same way, okay, Bitcoin bottomed out 2 months after the S&P 500 bottomed out in 2022, right? So this is what I mean. It's like, okay, even if we're assuming, right, even if we're willing to concede the point that Bitcoin and the S&P 500 have been truly correlated over the last 2 years, that's only 2 years of data. That's not enough data to make any serious macro claims about what will happen in the future to Bitcoin and the S&P. It's just not in regards to their correlation. And also when you're considering that data is very, very, very loose as well, because I just pointed out a few problems with it. So I don't think there's any real proper identifiable, I shouldn't say identifiable, any real proper strongly enough supported data in regards to a Bitcoin S&P correlation that would mean that the S&P 500 would have to drag Bitcoin downwards if it were to drop. And here's my second problem. I also don't think that it's guaranteed to drop. Okay, because first and foremost, there's 2 points why. First point, very simple point. If we were going to drop down on the S&P 500, right? Don't you think we would have continued going downwards from October 2022 after we saw a 27% correction instead of bottoming out for 14 months, which is longer than the entire time the correction lasted in the first place, bottoming out for 14 months, reaching an all-time high and pumping 38%? Don't you think we would have just gone downwards over there? And second of all, we are in a new phase for the S&P 500. We have never seen, as we pointed out at the start of this video, we have never ever seen, not in the 50 years of data I've got on the screen right now, we've never seen the Federal Reserve raise interest rates while the S&P 500 has been correcting majorly. That's never been seen before. So, firstly, right, it's just weird. It just wouldn't make much sense if the S&P 500 had to go down again to new lows. It could do it. Even if it did, Bitcoin S&P correlation isn't very strong. And thirdly, it doesn't really have to either, or it's not really easily suggestible that it will, because we've done something we've never done before in the entire 50 years of price history I've got on the screen here, in which the Federal Reserve has raised interest rates while the S&P 500 has gone down instead of decreased them. That's never happened before. So not only have we seen unique circumstances in the S&P, right, which kind of makes the predictions of the future quite hard to do from any actual evidentially substantiated perspective. That's one. Second of all, the correlation just isn't as strong as people think. That's two. And thirdly, it just wouldn't make much sense from a TA perspective at all. That's three. So I think that all three of these arguments combined, I think that finally, after a long period of time of just constant yabbering on about the S&P 500 and traditional markets, we can just stop talking about it now. I mean, obviously we have to keep talking about it to an extent. Perhaps that was a little bit of an over emphasis on of my frustration with the argument. Obviously, I will keep looking at it, and this video is proof of that, because you have to look at the things you disagree with, because otherwise they'll come up and bite you in the bottom, right? Because you'll get wrong eventually, because you won't look at them. You have to look at the things you disagree with, of course, because if you don't look at what you disagree with, you'll never find out what you actually think. So, of course, I'll keep looking at this, but I think the data is just so heavily stacked against these pathetically unsubstantiated arguments that are just really predicated on fear. They're predicated on fear. They're predicated on fear to get views. They're predicated as well as just a lack of understanding of how data actually works, a lack of understanding of how you're meant to make predictions. You are meant to make predictions based on data. There is no actual data here. Just based on the fact that we've seen something we've never seen before in interest rates rising during correction, it immediately makes our future predictions very difficult to substantiate by any data. And then you look at the reality with the correlation. There's no real correlation or no real pointable correlation for at least anything more than 18 months. That also brings the data down to a very limiting level. And then you look at the TA and it just all becomes too much, to the point in which any real proper claim, other than just kind of a side thought on Bitcoin going to new lows below 15K and breaking 13 years of cyclical, 11 years of cyclical theory based on just blank words that mean nothing about the S&P dragging down Bitcoin. It just becomes asinine to the point in which you don't even need to pay much attention to it. So I know this video is probably going to make a lot of people very angry. And by the way, I'm not saying at all that the S&P 500 won't go downwards. I don't think I'm in a position to say that. I don't know what the S&P 500 will do. I'm very confident and happy to say that I don't know. And the reason why I'm happy to say that I don't know is because that is what is evidentially supported. No one knows. And I'm not saying that in a vague sense, like, oh, no one knows what's going to happen. It's going to do whatever it wants. No, I mean no one knows because we have no trends anymore. Okay? If we were back here in 2021 and we didn't see interest rates rise with a correction for the first time in the S&P's entire history, then I could make predictions. But since we have seen something that's never happened before happen, we can't really make any predictions about what will happen next. We simply don't have that same thing on Bitcoin. Bitcoin has always done the same thing. And so we can confidently predict about what will happen next with Bitcoin. We can't do the same about the S&P. So to take the S&P massively seriously is a bit of a stupid thing to do. I will say that in regards to Bitcoin. So guys, with that said, I think, as I said before, and I am kind of rambling on a little bit here, I think it's time to finally kind of dismiss these claims about traditional markets dragging down Bitcoin. And look, even if they do happen, and again, I've made myself very clear, I don't think it's impossible the S&P will go down, but even if it does start to occur, there will be signs, right? Bitcoin's not going to drop to 3K in one day. If Bitcoin starts to go down and the S&P drops at the same time, by the time we get to 25K, 24K, we'll be able to realize what's happening very clearly, and we'll be able to adjust our analysis based on that situation. I think the people clinging on to their bearish claims, even throughout the lack of evidence and even throughout what's happened in the last year with Bitcoin pumping like a ridiculous amount and the S&P doing the same, that's at that point, it's just kind of a massive degree of cognitive dissonance, and it's a massive degree of bias just really painting itself very clearly. The fact of the matter is, if it starts to occur, if Bitcoin starts dropping with the S&P, we will be able to identify that very, very quickly. So it's not something we need to be concerned about now. I think that Bitcoin is on the right track. I do think that Bitcoin will see a pre-halving correction. This is something we will discuss tomorrow in tomorrow's video. I really wanted to focus this video on the S&P 500 specifically and how that will relate to Bitcoin, but I think I've made my points very clear. I've probably overemphasized my points and perhaps rambled a bit too long. I apologize for that. With that said, I'll end the video. I'll stop rambling. Thanks for watching, guys. I hope you enjoyed. Go ahead and check out the VIP group on Telegram. We trade altcoins on the VIP group with direct entry signals, giving you ideas on where to take profit, where to put your stop loss, all those kind of things there. We post 4 times a week, and we have an 80% win rate. You can see all of our transparent trading results on the group chat here in the Telegram results group. You can find that in link in the description below. And then also we have the Bitget and Bingx exchange. If you're looking for a place to trade cryptocurrency, to buy, to sell, whatever it may be, these exchanges, Bingx and Bitget, are the ones for you. I've kind of identified these exchanges myself. I've handpicked them myself. I reached out to these guys for partnerships. They did not reach out to me. It gives you an idea of the authenticity involved in my marketing of them, I suppose. We've got Bingx, which is global non-KYC, Bitget, which is global KYC other than the USA. So Bitget is global, Bingx is global, Bitget is everywhere except for the USA. Take your pick in that regard, based on your geographical location. Both very low in trading fees, both never been hacked before, all that good stuff. My referral links are down below for a 15% trading fee discount on both exchanges for life. And then finally, guys, the Crypto Academy Become a Trader 10-unit course will teach you how to trade. So if you want to do a course, a structured university-style course, learning how to do TA just in time for the bull market, this is your opportunity to do so at a low price. It's a very multi-layered course. It hits all kind of learning styles, visual learners, verbal learners, practical learners, everything you need in this course here to learn how to trade, with our email address there for any questions you might have. Guys, thanks for watching. Hope you enjoyed, and I'll catch you tomorrow. Cheers.